Welcome everyone to Global FX Radio YouTube, the Week Ahead Show. I'm your host, Andrew Spanton. Hope everyone had a nice relaxing weekend. Sunday, October the 19th, 2008. Nothing really new over the weekend except, boy, there are a lot of more write-downs coming. Boy, the governments around the world, you know what the U.S. total is? $5.1 trillion they are risking. They are putting up as collateral. $5.1 trillion. And add up what London and Europe and the rest of the other nations around the world are going to do, it's going to be $10 trillion by the time it's all over. I don't think that looks good. I think that's bad news for the stock market, bad news for earnings, bad news for everything when government gets involved in everything. Yeah, the government's going to be on the board of directors and not have a say in writing down certain assets when they're going to their buddies. I mean, it's going to be horrible. So anyway, look at the euro dollar. We're going to focus on the charts, not the tech and the macroeconomics. Macroeconomics, you can check me out on Global FX Radio, my audio edition. It's about 45 minutes long where I go over macro stuff. This is all technical. So we look at the weekly chart of the euro dollar. I drew my channel line here from the lows back in 2002, extending over to the lows in 2006. That's the 140. When we broke through there, we melted like butter. But that now should be resistance, major resistance, if we do rally. Now we have another channel line that I drew from the lows back at the end of 2003, middle, to the same spot in 06, and we have another spot, just about 129, that 130 level that I spoke about, and that's my Fibonacci spot from the total lows, and you'd have to do that from, if you're really going to zoom out all the way, you really would have to do it from the lows back in 2001 to the highs. And look at that level. Gee, that intersects pretty well with that channel line down at the 130 level. That's a 130.81 spot. That's a 130.81 spot. So you look at all these lines and you go, oh, you go, what the hell is he drawing? But very significant. Now, there is one other thing to look at, because you can shorten it up, and this is a case for a bullish case for the euro. That we already hit the golden retracement of 61.8 from that spot in December of 2005. So if we hold here, and this doesn't look very good, the weekly chart. Weekly chart looks terrible. But should we hold, and we break through that 138.50, 140 level, well, 139 level, you know, we could push back to that, maybe that channel line we drew at the 140 level for sure, easy. I mean, this is way oversold on a weekly basis, but you know, this Fibonacci line was broken. It didn't hold. It was a violation. So then you got to go to the longer term, the bigger Fibonacci. So as oversold as the euro dollar is, as tempting as it is, when the stock market goes down, they all go down. Get used to it. It's a 99% correlation right now. And this is what's called macroeconomics mean nothing. It's the stock market. It's LIBOR spreads. It's TED spreads. It's corporate debt spreads. Anyway, looking at the weekly chart of dollar yen, I gotta try and make this quick because you'll see. Dollar yen again busted. This is a weekly chart. Remember, a weekly chart, and this is going back to 2000. Busted. Bye bye. Busted. Any rallies in dollar yen should be shorted. We could bounce in this dollar yen on a weekly basis. Okay, all the way to this channel. If the stock market comes back, we're probably gonna bounce. We could bounce up to 107. On the dollar yen, it would still be a short. Then we look for a shooting star. We look for something to tell us to be short. But dollar yen, again, busted through this entire level. You even do a retracement. Okay, a Fibonacci retracement on dollar yen. From the lows to the highs. And we busted through the 61.8 on that one as well. Did not hold it. So, looking at dollar yen again and the stock market, we're going to look at that right now. And you'll see the stock market, that looks terrible too. I'm including in this video a little clip on the Dow. I'm going to start doing this on YouTube as a separate video. Daily FX may or may not get it. So you really want to make sure you know my YouTube broadcast, which is Voice of Forex. Type in Spanton, what have you. I'm going to be doing gold, oil, bonds, silver, maybe even copper. Obviously copper is important. The Dow, the S&P, and things related to our market in foreign exchange. So we'll look at the weekly chart here on the Dow, and it looks terrible. We failed. The bottom line is we failed. This only goes back to '07, but still, we completely failed. We should have rallied. You look at the daily chart of the Dow, and again, the Dow Yen strategy where they trade lockstep is working to perfection. Truly, is working extremely well. And you got to go with it when it does work that way. And you look at here, shooting star, boom, bearish engulfing. Look, we have the hammer or the comeback and bullish engulfing bar. So we're going back and forth. But look, we had a shooting star on Friday. Not a good day. So the yen, I'm nervous. This yen doesn't look very good. The yen looks strong. And look at the monthly chart. We go back to '03, and I don't see why we're not going to push down towards 7,500. So they have my little Dow interjection. So now focusing on sterling dollar. Hopefully you enjoyed that Dow, that little Dow chart. I think it's very important to follow dollar yen and the Dow. Extremely important. Looking at cable on the weekly chart. Now cable looks a little bit better. I mean, obviously cable certainly, you know, had another inside day though. See, if you look at these weekly charts, they're all inside. The euro had an inside week, and cable again busted through major support line. I mean, it busted through. If you're a true technician, now I'm a quasi-technician in that, you know, sometimes they break it down to break it out, and I'm a true believer that if that's the case, you must be, you know, channel lines mean nothing, Fibonacci's mean nothing. If you get a real reversal, macroeconomics and everything, and it pierced through a major channel line, well, it went overboard a little bit. So, you know, that's my big problem with being a true, like, stubborn technician, refusing to say, oh, well, it broke through this channel line right here, and now it's got to be short. Now, I agree. It didn't rally. If it didn't close well, and if it was going to be that situation where we broke through, but it was a fake breakout, and now they're going to rip it, because they sucked in a lot of the shorts to get short and a lot of the longs to capitulate. But the failure of the stock market on Friday, the failure of this to rally. Euro sterling was down. That's why this was up. Again, this level of 170, we breached through that again, and it's not going to look good. And remember, I'm doing 2 broadcasts today, week ahead, and I'm going to do the hourlies later on when the stock market opens. Later tonight, when the futures market opens, I'm going to do another YouTube at around 10 o'clock tonight for the hourly charts to give us the 24-hour heads up. Looking at the euro sterling pair, again, bad looking chart, big reversal. That's why the 77, I have a profit target. We break through here, say low to 76. Inside bar, but closed very much towards the lows. Euro sterling looking very, very weak. And again, unless we take out 81, this is a dead short. I think we go to 75. That means cable's going to put up these fits and outperform. That's why the euro yen, we see the euro yen does not act very well. And look at this weekly chart of the euro yen now. When you look at the stock market's down here. Euro yen should be 120. Euro yen still underperforming. Euro yen about to break through this channel line. We break through this channel line, say bye-bye. Say bye-bye. Is it oversold? Absolutely. Could it rally? Absolutely. But it closed very poorly. Well, again, we'll go over the hourly chart. I think the stock market looks bad, then this is going to go lower. Sterling yen, not much time. I always shortchange you on sterling yen. People vote which one you want, sterling yen or euro yen first. Sterling yen acts a little better. Another inside weekly bar. Remember, there's the weekly, so there's a much longer term. But again, that way down. So sterling yen looks like it could rally. Euro yen looks like it got more to go. These weekly bars give us, again, we're busted to the downside. I don't see the stock market looking very good, and therefore these should probably test their lows again. But it's all about the stock market. So the stock market rally, all bets are off. Andrew Spanton with your weekly Global FX Radio YouTube Week Ahead show.